What is up, guys? If everything is working out right now, I am live. And let's make sure I got a screen share. So, this is first time doing a LinkedIn live. Hopefully, it's one of many. I have no idea if I'm coming through or not. It doesn't allow feedback like Facebook does, but I'm just gonna go ahead and roll with this and teach the class. And I think you guys can pop in and have comments. And if anybody's in right now, pop a comment and let me see how this comes through. I should be able to get it, but if not, so as I understand it, LinkedIn takes this and they send it out to everybody, and it's going to be recorded for future use. So without further ado, I'm just going to dive right into the class, and if anyone has any questions, feel free to chime in and ask. So this is super informal and laid back. I I get really excited talking about real estate, right? So I'm a big dork. I'm the guy that's hanging around as we're, hanging out with family or friends and we're drinking a beer out of the fire pit. And I'm the one talking about loans and money and that kind of stuff. And it's what I do. It's who I am. I just, since I got out of the military, I just feel like I've continued to serve my fellow brothers and sisters. So when I'm flying the flag today, got my Air Force shirt on. So when I got out of the Air Force, my main vision, I thought what I wanted to do with my life was I wanted to flip houses, right? So we had saved up some money. So I start networking with real estate investors, and I'm going to learn the real estate. I'm going to learn everything there is to know about real estate, like a good soldier would, right? And I went to this meeting. It was a real estate investors of Nashville, REN, REINTN.org, RENTN.org. Go check them out. Check out some of their meetings. That's the meeting in Tennessee that I went to. It's a group of real estate investors that get together several times a month and network and learn and talk. And anyways, I went to one of these meetings, and there was a couple guys up on stage, right? They were talking about lending and mortgage loans. And after the meeting was over, everybody swarmed these guys. And my buddy that I was with, he was like, those are the guys making all the money. And I was like, wow, I see that. So I stumbled into the mortgage business thinking that I wanted to invest in real estate full time. So I've always had a real estate investor, focus. I've had the binoculars on, and my lens, how I view real estate and my job doing mortgage loans. Everything I look at it from an investment standpoint, right? Everything you do in real estate is purely an investment, right? So it's nothing emotional. It's just dollars and cents and tactical, right? Now, don't tell your wife I said that when it comes down to buying your own primary residence or your own house. That's a little bit different. That's emotional. But what we're going to talk about in real estate investing, there's nothing emotional about this, right? Um, so let's dive into this. I have created a PowerPoint presentation that I wanted to share with you guys. Let's talk about leveraging your VA loan, right? So this is what I get super excited about is teaching veterans how to leverage your VA benefits and buy investment properties, right? I think it's the greatest thing ever. Hang on, I'm having technical difficulties. Let me get on the right screen here. Well, it's not letting me do it on the right screen. Give me a second. I've got to switch my screen share. Hopefully this works. Okay, perfect. So, uh, how to leverage your VA benefits to buy investment properties. Okay. So basically, the VA is such a blessing for veterans. It's one of the biggest benefits that you'll ever get from getting out of the military. There's nobody else out there that can buy a house with no money down. So I want you to think about it this way. We're talking about investing, right? So show me somewhere where you can buy a stock or you can buy anything without putting any money down, and then you get a big fat return from it. So I've got a lot of people right now that bought a house a year ago and they just turned around and sold it within 12 months and made $100,000. Now, I know we're in an appreciating market. Our market appreciated real fast, and we're going to see it cool off right now. Everybody kind of put the brakes on things, right? But just think about that in your head. Where else can you get an appreciating asset with no money down? Okay. Now, some of the things that I'm going to cover, um, some of the things that I'm going to cover, I've got to throw this out there. You're going to need to seek professional tax guide and legal advice. This is educational content only. I am not a CPA. I'm not a certified financial planner. I'm not an attorney. I'm just a mortgage guy, right? I am a licensed mortgage broker. I can help you with that kind of stuff. But as far as tax advice, that kind of stuff, I try to stay away from that just because I don't want to tell you something wrong. There's so many things and moving parts and changes that could be different for your scenario. Always seek tax advice. I work with a team of super professional accountants. So if you need a good CPA, let me know. I can hook you up for sure. Number two, all of my numbers are subject to change. Okay. All markets vary. Things are different. I'm going to give you some very tangible examples. Just know the numbers may change depending on your market. Okay. Number three, so if you're going to be investing, as with anything, you need to dive in and learn as absolute much as you can about real estate investing. Okay. This webinar, this that I'm doing right now, this is a great way to start. You're learning the financial basics in the background, and this is a great way to start, but don't stop here, guys. Dive in, go join some local investor groups. There's several of them. Like I said, REINTN.org is the one that I'm a part of. I like to present there whenever I can. It's a great group of real estate investors, and you've got so much to learn if you're just beginning this journey. But if you are just beginning this journey, I just want to congratulate you. It's such an honor to be able to watch people walk through and start out with absolutely nothing, and in 2 or 3 years own 3 or 4 properties. I mean, I see it all the time, and this is what I'm going to teach you guys how to do here. And it's so simple, it's ridiculous. Okay, you're going to be surprised how simple it is. Number 4, work with a good realtor and also wholesalers, and invest with these other network with these other investor groups. Okay, a wholesaler, these are people who their job, their main focus in life is they go out and they try to find people that have houses for sale. I like working with wholesalers just because they can get you a good deal and it cuts out the legwork for you. Finding the deal is the toughest part. Okay. These guys, you may see a sign in a yard, or I was in front of Target the other day and it said, we pay cash for your house. It was a little yard sign. They call them bandit signs because you're not supposed to put them out. So you're a bandit if you put these signs out. And so you'll see these signs, you'll see billboards, you'll see advertising on social media and stuff like that. These guys that offer to pay cash for your houses, those are usually wholesalers. So what they'll do is they will find somebody in a situation where they need to sell their house and they need to sell it fast. They need to sell it cheap. The wholesaler will go in and buy it, and he may mark it up 5%, $5,000, $10,000, whatever the case may be. He'll mark it up a little bit, and then he'll turn around and sell it to another investor. A lot of times these houses will need repairs. Sometimes, man, they're move-in ready. You just never know what the wholesaler is going to run across. I'm a big fan of wholesalers. I've got a network of wholesalers out there that have properties available all the time. These guys, man, they just put their nose to the grinding stone to find deals. It's crazy the links that they have to go through to find good deals for you to invest in. All right. So, okay. Number 5, if you just take half of what I'm about to say, you're still going to be successful. So take everything I say with a grain of salt, question everything I say, dig into it for yourself. But if you just listen to what I say, half of it, I think you're going to be successful. And number 6, there's so much more that goes into this. This is just an introduction and just to kind of give you a brief overview of some things to expect. All right, so let's dive into this. This is a short presentation, and like I said before, you're going to be surprised how simple it is. So the first thing that you have to know about VA loans. VA loans are for primary residence only. Okay, you may be saying, well, this is a seminar about investment properties. Yes, it is. But the VA loan, the intent when you go to buy that house, it has to be your primary residence. Now, what we do is we call this house hacking. So basically, the premise behind this is you buy it as your primary residence, put no money down, you live in the property for a year or so, however long you live into it, you fix it up, and then you either turn around and sell it or you rent it out. We'll talk through those details here in just a second. But I'm going to refer to this as house hacking. Okay. So VA loan, again, cannot be used to purchase an investment property. if you're going to purchase a property that your sole intent is to rent it out or to use it as an Airbnb or to flip it or something like that, you're going to need a different loan product. The VA is not the product for that. The VA has to be primary residence. Okay, so that's first and foremost. So let's talk through the qualification requirements for a VA loan real quick. I wanted to hit these up because it's very important. You have to have a certificate of eligibility. I can pull that from the VA website. That's too easy. Okay. Credit. Most mortgage companies have their own minimum credit score requirement. The VA actually does not even have a minimum credit score requirement. However, they do have a credit content requirement. So if you got messed up credit, we probably need to talk, and I need to help you get it straightened up, squared away before you can start going down this road. You can, however, go down to a 500 credit score. I've got investors out there that will service your mortgage loan with a VA loan with a 500 credit score under certain circumstances. Okay, income. The VA says that you have to have adequate income to qualify for the loan. Okay, they define adequate income as that you have the ability to repay the loan. Well, that seems like a no-brainer, yes, but documenting that could be another thing, because back in, we had the foreclosure crisis back in 2010. People started suing the bank saying, you never should have given me this loan in the first place. We couldn't afford this loan to begin with. You never should have given us this loan. So all the banks came in. They said, okay, we're going to make you document that you have the ability to repay the loan. Textbook answer, they like to see your debts no more than 45% of your income. Okay. So take your total debts that's pulled off your credit report, divide it plus the new mortgage, divide that by your income, and that gets you your debt to income ratio. Okay. So I'll help you calculate that. The VA also says that your income must be stable, reliable, and anticipated to continue for the foreseeable future. I copied and pasted these from the VA website directly. Number 4, the property must meet the VA's minimum property requirements. I could write, in fact, I teach a class to real estate agents just on the VA minimum property requirements. It's super simple. They've got about 13 bullet points. Basically, the house has to be safe, sound, and sanitary. The house has to be habitable. You cannot buy a house that needs to be that's got a hole in the roof, that's not going to pass safety issues. Okay, the house has to be habitable. There is one caveat to that. If you find a house that needs a bunch of repairs, you can do a renovation loan, VA renovation loan. They give you a little bit of money to go in and fix up this house. Okay, those are a little bit more complicated, but those are the 4 main requirements for a VA loan. Okay, that's it. Those are the 4. That's all you need to do to qualify for the VA loan, right? Now, how the question that you guys are all asking, we're coming to is, how do I buy my first home, or how do we put this whole thing into effect? So, you need to buy your first house. Okay, this whole thing hinges on buying your first house. Now, I've got a couple rules for buying your first house. If you don't already own your first house, or even if you do own a house and you're looking to upgrade and buy a new one, there's a couple rules that you have to live and die by. Initially, when I opened up, I said, you can't be emotional. This is tactical. Okay. Money should always be tactical, but how do most people make money decisions? Emotionally. Chances are the car that you're driving right now, you made an emotional decision when you bought that. Not all people, but most of the time. Okay, this is an investment property. It's just like buying a stock. If you were going to go buy a stock, would you invest the crap out of it, or would you go make an emotional decision because I really like that company? No, this is tactical. Okay. The house, number 1 rule, the house must appreciate. Period. Point blank. I think a 10% per year appreciation is a healthy market. Middle Tennessee in the past 2 years has been like 30 to 40% appreciation. I think we're about to see that change. The whole country in general has seen a huge increase in home appreciations. I don't think it's going to go back down. I don't think home values are going to go down. I think you're going to see it flatten out. We were at a very steep spike. Now I think you're going to see that spike level off. It may go down a little bit. It may porpoise, but for the most part, I think home values are going to stay where they are. What would change home values? People losing their jobs and not able to work. That's pretty much the biggest driver of home values. So keep your eye on inflation. Keep your eye on what the government's doing. But just know people have to have a place to stay. And the only thing that could affect the value of your investment is if people start losing their jobs. Okay, people start losing their jobs, things start getting tight. You may have to lower your rent. I don't know. That's just a what if scenario. Okay, but you do need to be aware of the risk, right? So let's say if a house appreciates 10% per year right now in Middle Tennessee, our median home price is $306,000. Okay, now there are houses that are more than that or houses lower than that. Let's just go with an average $306,000. Well, after your first year in the house, that house at a 10% appreciation, that house is now worth 354, 960. Okay, see how that works? The second year, if the house continues to appreciate at 10%, which keep in mind is about 30% lower than it is, 20% lower than it is right now. I'm just being super conservative. Within 2 years, your house should be worth about $411,000, almost 412. So you've almost gained $100,000 in equity in 2 years, right? Sometimes the next bullet, I say you may have to spend more than anticipated. Sometimes you may have to spend a little bit more than you were thinking. Like a lot of people get fixed on a number in their head. They're like, absolutely not going to spend any more than $200,000. By golly, I hear a lot of my parents' age generation draw a hard line with that, and I think it's foolish. And let me explain why. Larger homes appreciate faster. It's just a fact of the matter. If you buy a $300,000 house or you buy a $500,000 house, the $500,000 house could now be worth $700,000 in 2 years, where a $300,000 house is only worth $400,000. So you're telling me you're not going to spend an extra $100 or $200 a month to make an extra $100 or $200,000 in the next couple of years? You really got to think about that. Stop going to Starbucks every single day and start putting that money towards your investments. Put that money into your future. I am not opposed to you taking out a bigger mortgage than you may have originally thought. I look at it like an investment. I look at it like you're maxing out your 401k. You're putting additional money towards your 401k. That's all rental properties are. That's all the mortgage is it's investing in your retirement. We're investing in your future. So don't be afraid to spend a little bit more to capture a larger appreciation. Okay, just remember that. So I've got 3 rules when buying any property. This is investment or your primary residence. So rule number 1, you must be able to sell the home for a profit within 12 to 24 months. So the game here, if you're going to use your VA loan to buy investment properties, you want to live in the house at least a year to 2 years, whatever. It's up to you. Some people are different. Some people less. I had somebody recently bought a house. They moved into it. About 3 months later, he called me and he's like, bro, my wife freaking hates the house. She hates the neighborhood. My kids hate the schools. Like, we got to get out of here. Can I even do that? And I was like, yeah. I mean, there's nothing. The VA doesn't put stipulations on how long you have to stay in the house. Now, most mortgage companies they like for you to stay in the house at least 12 months. And here's why, is because the servicing company does not make any money off of your mortgage for the first year. Usually they don't start making money until year 2. So the mortgage companies like for you to stay there for at least a year, but the VA doesn't care. Okay. Now, we are subject to, me as a mortgage lender, I am subject to what's called a recapture. So if you were to, not a recapture, an EPO, early payoff. So if you were to sell your house or refinance it within 6 months, they come back to me and they make me buy that loan back. That's no fun. I do not want to help you buy a house if you're just going to flip it within the first 6 months, because the mortgage company is going to come making me buy it back and it's going to hurt me. And I know you guys don't want to do that, right? So just know that you have to live in it for at least 6 months, to make everything right. Okay. My second rule for buying investment property, you must be able to sell the home quickly if needed. What happens if you're active duty and you get dropped PCS orders and you've got to move across the country and you don't want to deal with the headache of having a rental? You need to be able to offload that property fast. Another thing that rule number 3 kind of goes into this: don't worry about buying your dream home immediately. This is not the time for that. This is not the dream home. This is a house that's going to be an investment tool, whether if you plan on holding on to it or if you plan on selling it for a profit to use that money and go buy more properties down the road. Don't worry about everything has to be perfect. You don't have to be in the perfect school zone. You don't have to have the perfect colors on the walls or the perfect color brick. It doesn't matter. This is an investment. Okay. So what I mean by that, you must be able to sell the home quickly, and it doesn't have to be your dream home. What a mistake that I see a lot of people make is they will go out and they'll want to buy a farm out in the country to get away, and you want a homestead on your own piece of land. A lot of times, man, if you go buy a cabin out in the middle of the woods, it's going to be hard to sell. That's all there is to it. You're going to be stuck with it, and it may not appreciate as fast, right? Your homestead may be your idea of something, but that doesn't mean it's going to sell. Now, if you find something that's a crazy screaming deal and you know you're going to be able to turn around and sell it within 12 months, 24 months for a profit, and you're going to be able to sell it quickly, by all means, go for it. Okay. Okay, so let's talk about buying your second house. So here's how you do this. This is where you really make the VA loan really kicks in. So you have to buy your first one. Now let's talk about the second one. Your options are you can do a cash out refinance. So you can take out a VA loan. You can take out 100% of the equity on your house. So going back to my example, let's say you bought your house a year ago for $300,000. Well, let's say hypothetically you didn't put any money down, so you probably still owe about 300, maybe a little bit less, but let's just, for easy numbers, let's use 300. Well, now your property is worth 400,000. You can go out and do a refinance, take out up to $400,000. Whatever your house appraises for, you can get 100% of that appraised value. Okay, so you pay off your current mortgage, and then you've got $100,000 in your hand. Okay, now you still got to make payments on that $100,000, right? But you can take, now you've got cash in your hand. Okay, your options here, you can okay, so that's one option. Let me put that on the table, and we're going to come back to the cash out part. The second option is what's called second tier entitlement. This is what most people don't know about VA loans, is that you have the option to use your VA loan again. Actually, you can have two or three. I have helped somebody have a third VA loan at one time. So most people don't realize that you can have multiple VA loans at once. You absolutely can, and it's called second tier entitlement. I've got a blog on my website talking all about second tier entitlement. It's funky how they calculate it, but basically you can take your current house that you've lived in for a year now, you can turn that into a rental property, and then you can go buy yourself another primary residence. Okay, that's the house hack, right? So now you go find a renter to put into this house. In fact, if you get a renter in it, you find somebody that's willing to sign a lease, I don't even have to count that debt against you for your first house. I don't have to count the full debt, and you can go buy another one using your VA benefits. It's brilliant. That's called second tier entitlement, where you have two VA loans at one time. There is a max. You can't borrow at one time more than whatever the county's maximum loan amount is. So if your first house was $500,000, then you're probably not going to be able to buy a second house, much more than that. Because right now, next year, the county for 2023, the maximum county loan limit, I just saw it yesterday, it's jumping up to like 700 something thousand dollars, which means for a VA loan, you're not going to be able to have much more than $700,000 of total loans out at one point in time. But if you buy a $200,000 house, you come around by a second $200,000 house, you come around by a third $200,000 house, you're only at 600,000 total, and you've got plenty of second tier entitlement to be able to buy three deals. So just make sure you're buying smartly with the overall game plan of investing, right? So that's second tier entitlement. What was next? Okay, the third option is you can sell and upgrade. So take your first house that you bought, you sell that, you take the profit, keep it in your pocket, okay? We'll put it in the bank temporarily. You go buy your new house using your VA loan with no money down, right? Go buy whatever house you want with no money down. Take the money the profit that you made off of selling your previous house, go use that to buy the investment property. You can pay cash for it, or you can put down 20% and get a conventional loan. Heck, you could even take enough, as long a conventional loan for an investment property is only 20% down. So if you make enough money, you could actually buy two more properties with the proceeds that you earn from your house if you make enough money. I've seen people, I've helped people do that. They buy their own house with no money down, and then they go buy two more investment properties. Boom, just like that. It's that simple. So that's the three options to be able to leverage your VA loan to buy investment properties. Okay, so this whole thing I summed up in this one slide. Three options: cash out refinance, take that money, Go buy an investment property with it. Okay, you take 20% down. Go get a conventional loan with that with your cash out refinance. You can use second tier entitlement to go buy yourself another one, or you can sell and upgrade. Take the proceeds for a conventional loan. Okay, so that's that. Your a couple quick notes. Your first rental property, most of I just used a quick example. And I'm going to breeze through this. They're going to vary. If you can find a $200,000 house, most $200,000 houses around here in Middle Tennessee, they're going to be out a little bit, but you're gonna expect about $1,200 a month in your monthly mortgage payment, and then the rent on that's typically going to be about $1,800 a month currently. Different in different areas. Just take it with a grain of salt. But you're going to cash flow about $600 a month. I think if you can cash flow, three, four, five, $600 a month, you're in a really good spot with a rental property. What I like to do personally, I tell people if you can put your current mortgage, your rental houses on a 15-year amortization, or if you can plan on paying them off, make payments to the bank like you're going to pay them off in 15 years, but don't cash flow it, meaning cash flow means you take the money that you earn every month and you stick it in your pocket and you go spend it. But instead of spending it, take that $600 a month that you're earning and put it back into the house. Pay that sucker off in 15 years, pay it off in 10 years. Who knows? The faster you pay it off, then you can retire and you've got this passive income, cash flow coming in. Pass it off to your kids when you pass away. This can be your inheritance, guys. I'm telling people right now, you're losing money in a 401k, right? Check your 401k accounts. They're all losing money across the board. I don't know anybody that's chime in and tell me if you're earning money on your 401k, but make sure you check the statement before you chime in. Most people are losing money. Take your 401k, go do a self-directed IRA and buy real estate with it. It's a no-brainer, and you're going to make money right now as opposed to losing money. Okay. Financial planners don't hate me for saying that. Okay. I know financial planners don't like me saying that. But most average houses, if you can cash flow $7,200 a year over, if you've got 2 units, you're looking at $14,000 a year. That $14,000 after 2 years turns into $28,800. So, it's a little side hustle. You're not going to get rich owning 1 or 2 properties. You're going to get wealthy owning multiple properties over a long period of time. And you can do it starting out with no money out of pocket. And I just explained how to do that. One more thing that I want you to consider for buying investment properties is a tax benefit. Okay, so for 2022, the income tax bracket is $79,000 for married filing jointly. If you make over $79,000, boom, you get hit with this 22% tax rate. Okay, so your taxes are about $17,500, right? If you're below the $79,000, then you fall into a 12% tax bracket. Okay, that's only $9,500 a year. The difference in those two tax brackets of about $8,000 a year. Most people in Middle Tennessee or even across the country, combined household income is right around that $79,000 mark. And the IRS knows that, right? And that's why they put the tax brackets so close to each other, okay? Because they want you to be in that 22% tax bracket. But did you know that by buying investment property, you can write off things, use that as a deduction, depreciation, any kind of expenses you put into the house that could potentially put you into the lower tax bracket. This is why most investors buy real estate, is they're gaining their appreciation long term. Okay. They're not really, most of the savvy investors that I work with, they're not looking to make a big whop monthly. They're looking for a long term gain, kind of like your 401k or a pension plan, so to speak. So go for the long play, but where they make the short play is in their tax savings. You can write off a lot of stuff owning investment properties. Again, I'm not a tax accountant. Seek advice from one before you go into this. Okay. So that's it. That's all I've got. I hope in this 30 minutes, I wanted to keep this thing at 30 minutes or less. I'm at 29 minutes. Hopefully this has been very fruitful. I am here. I am currently licensed in the great state of Tennessee and Florida. So if you reside in Tennessee or Florida, come to me. Let me know. I'd love to help you with your mortgage. We'll help you get pre-approved. I'll answer any questions I can. I know you're going to have a ton of questions after this. I would really like your feedback. This is the first one of these I've done. I had someone create this slideshow, and I think Tony you did an amazing job, brother. If you're watching this, I thank you from the bottom of my heart, and I thank you for helping me serve the veteran community. but I do need feedback from you guys. If there's anything I need to change or add or anything I said incorrectly, please let me know. All right. I love you guys. I'm out.